Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. What do we got going on here? Let's see. Again, I'm not on that kick from yesterday solely because and for the last week and about bod vigilantes, and I've kind of moved away from that solely because finally everybody else caught on. Shh, don't tell anybody, but everybody else caught on. How about that, huh? Yeah, I mean, we saw where they cut the interest rate a half a percentage point, and interest went up three-quarters of a percentage point. The bond traders basically said, shh, don't tell anybody. It's a big secret. That's right, it's a big secret. Yeah, big secret. Yeah, how about that? Now everybody's starting to see it. They're talking about it on all the channels. They're realizing that, oops, something went wrong, huh? Something went wrong. Like, we warned everybody. Oh, here's jobless claims. Jobless claims came out 227,000 versus 245,000. Let's see what else you can say. Data at the markets. Let's bring in. Let's see. Investment officer. They're talking to a few people here. Basically, let's see the numbers. As I just said, I guess we could put up the Dukascopy calendar. Let's see what these guys say first. The claims always are a little off. They're a little crazy, and then they adjust them. And it's like, why they take them so serious. It's kind of like, it's not so much. But anyway, what it really comes down to, traders, is you can see interest rates. This is it right here. Here's the price of the bond. When the bond is going down in price, the value of it, interest rates are rising. And vice versa. When the bond price is going up, interest rates are dropping. So you can see here a little interest rate drop today going on. Maybe because of the physical reality of it all. Now everybody's starting to realize the Fed is probably saying, ooh, we need to put our bond put back on again. Protect the markets, that type of thing. I mean, I only think I can imagine. I mean, look, the politicians are going to be the politicians. The ruling party is going to be the ruling party. It's going to do what it does, and that is try to manipulate, control, and hide. Everything they do, and then tell everybody how good they are. Isn't that wonderful? They're just such a wonderful people. All right, so yes, there it is. And so you can see as this is going down, you can see the dollar index has been going up ski. Let's see where the dollar index is right here. And let's see, dollar index. Yeah, we'll see in a few seconds. There it is right there. There's the dollar index. You can see it's the opposite of the bond. And it was, a real shake-up, I guess you could say, in some way, is that the markets did not like. You can see the stock market has backed off. It's been a small battle going on. They're not sure what to do and how to do it. They don't know if it's going to be fantastic or crazy or... the media says one thing. I understand Wall Street itself is starting to panic. Remember, Wall Street today, for the last 25, 30 years, basically, is controlled by the retail. And so the hedge fund universe has basically become the home of the professional traders of Wall Street. And the Wall Street itself now is... controlled and run by the retailers, the guys and gals that are selling you things. So they're the salespeople, and so I understand the salespeople are very nervous. They're very confused. They don't know what to do. As far as the media is concerned, Adolf Hitler may be our next president. Ms. Harris came out yesterday with an announcement. That she read that he is going to have generals that will not adhere to the Constitution of the United States, and they will break the army out and kill everybody they don't like. Yep, how about that? Isn't that amazing? It's what a craziness. Can you say anything more crazy than what the ruling party says every day? No wonder people are shooting at Mr. Trump because they think he is. They compared him to Mr. Hitler, and I'm trying to think of the fellow in Italy at the time, Mr. Mussolini, and they compared him to Mr. Stalin. They said that he has the attributes of all three of them. And so why the majority of the country is supporting him, they don't understand, because this is the second coming of evil. And they're not the second coming of evil. And so that's the craziness we got going on here. So the stock market is acting extremely vacillating, extreme. If you would like Doc's opinion on a specific market, just ask. Good morning, Robin. I like that. Yes. You're welcome to ask any questions anytime and take me off my course. I have no problem jumping subjects. I'm just doing what I normally do, and that is just ramble about what we're seeing, how we saw it. And you heard it here first a couple of weeks ago. I was trying to warn everybody that the bond vigilantes were in control. Matter of fact, you can see there's a webinar or two with that title, and how they won, and supply siders have won, and Keynesian socialist economists have lost. Things like that. I keep on reminding everybody about that. So usually we're ahead of the curve on some level or another around here. So that's the entertaining part of it all. That's why it's so much fun. So when you're more right than wrong, it makes it a lot easier. That's for sure. My first sip of tea. I like that. There you go. So from there's the dollar index, and I think I saw like somewhere around the European Open this morning. All of a sudden, they started to step up a little bit and started selling dollars and buying euros and so forth. We're starting to see a little more strength in there. We'll see. Let's take a look at the euro. See how it looks this morning. It's up higher. It is higher than from yesterday. And matter of fact, I guess it's on here. Here is right there. This is the intraday of the euro. And so somewhere's around, this is the opening of Europe right here. That's all the close of Asia. This is the opening of Europe. And for the first 45 minutes to an hour, they started to sell it down. And then out of nowhere, they lifted it up. And you can see it's definitely higher now than it was hours ago. And let's see, I think you can see that it's higher than where it settled yesterday at 5 o'clock Eastern Standard Time. So it's trading a little bit higher from there. If we just move it to there like that. Oh, you can't see because I've got you on the beta still. There we go. So here we go. Look, this is the intraday of the euro. And you can see, it's definitely higher. They're definitely reaching for it. Somebody came in and started buying euros and selling dollars. Who knows? Might have been the Fed. They at this point, they need to do anything they can to try to help the ruling party stay in power. They're really hungry to defend them, and we'll see how well that goes over the next 12 next 12 days. It'll be very interesting. So, next week will be the last full week of the election. After that, the following Tuesday, it's over with. And I think we'll know early. We'll know early on Tuesday of November 5th. And, it's not going to be like weeks and days or days and weeks and things like that. I think we're going to know. I think it's going to be that overwhelming. But, okay, let's minimize that. And then switch over to the daily. Right here. You can see here, it's trying to lift up. You can see the histogram is heading towards the zero line. But we're still in that weekly sell. So there's some pressure. It's been in that sell for a while now. This is when the bond vigilantes took control and said, you think you can control interest rates. Maybe you can on a very short-term basis, but not in the open market. And that's what really has happened too, is that it's more of they lowered the interest rates because of how expensive it is for the government to pay its debt. So they lowered it a half a percentage point so that they could do, they can officially say, well, this is what the official rate is. So it doesn't matter if the open market says it's 3/4 higher now. And so it's, they've lost money in a sense. They're going to say, well, this is what we're paying and that's it, because we only pay what the 2-year bond does or something like that, or the 10-year bond or whatever they're basing it off of. So it doesn't matter what it's trading for. It's just what the official rate is by the government. And when the Fed says it's 4.5, it's 4.5. When they say it's 4, it's 4. It doesn't matter in the open market if it's trading at 5. They'll only pay 4. And that's part of it right there. Huh. Interesting. Things are really turning strange here in the sense that we have a lot, not a lot, but we have a big handful of Democrat senators now putting ads up on TV with Mr. Trump and saying they can work with Mr. Trump, and Mr. Trump, they have supported some of Mr. Trump's policies. They're not willing to put the presidential candidate for them, Mrs. Harris. They're not willing to do that. That's interesting. That's why I think that we're going to see a lot of information on Election Day that's going to be way, way earlier than we're used to, back like the old days. And, before the ruling party here went totally nuts over the last decade. So they were just crazy back then. Now they're totally certifiably nuts. So, all right, and from there we'll go over to, there's the cable. Cable doing the same thing. Matter of fact, that cable is just a smidgen away from going into the plus side. The red dot's there still. You can see that on the daily bar right there. You can see here the weekly is not just like the euro. It's not really turning yet, but let's put it this way, it's becoming oversold. You can see that, and the fast has jumped through it. Now the next question is, will the fast jump through the zero line by tomorrow? Let's see. Let's go back to the euro for a second. Same situation. It's way oversold. The euro way, way oversold, and you can see the fast has broken over the last couple of days and is trying to turn up. All right, and then from there's the Swiss. And the Swiss has that same gig going on. It's lots of daily buys, and you can see it's a little bit lower today than yesterday, but not by much. And you can see it's in that weekly buy, and it's a little overbought, no doubt, because look how high up the green line is. And, it's way up there, and, compared to the histogram, you can see how far away, and the nonlinear manifolds, the golden lines here, it's extremely over it, You can see here where when it's bouncing all around it, underneath it, like, let's see, let's move this over a little bit, like so. You see when it's extremely in the sold like this, way, way down, and it starts to come up and starts to get into the manifold area here, and we start to firm up, and you can see it starts to build a base, and then we leap through there. You can see that there, and you can see like right there goes into the daily buy. You could say, wow, it did it before, but how come now the math is turning up? And the math picks it up, and it's telling us that it's going to take off, and it does. It takes off. It's the way it goes. That's the way our math works. So that is the Swiss, the great inflation fighters, who have done a fine job of managing their money in Switzerland at this point. From there, we'll go over to the yen. A little backing off from the dollar. That's interesting. It's been lifting up. It's been in the buy since down in here, and you can see the weekly is also pretty extreme. I thought it would basically choke in the 50s, like 50 and a half, 50 and a quarter, 50. Didn't think we're going to see 51, but we've gotten past 51, and we're at 52.11 right now, with a high of yesterday of 53.19. So they really started to reach for it. That's what happens when the bond vigilantes really say no. They mean no. So I think they got their point across, and I think the chairman, let's put it this way, there was a lot of talk last night and this morning that if the Fed has to raise rates now because of inflation, that Mr. Powell should resign, because it'll show that he is so incompetent in so many ways over this last 3 or 4 years that that he should be embarrassed and resign. Because I mean, here this guy's been screaming from the rooftop since November. We mentioned here every so often, like yesterday, that we're going to cut rates. Oh, we're going to cut rates. We need to cut rates. 7 times we're going to cut rates. And now we're down to possibly 3. And the first chance they get to cut rates, what do? They do a full half a percent point, not balanced to all these little quarter ones they did going up, which was it was something. It was and then they started doing 3/4 point ones. They started realizing how in trouble they are. And so he's walking a very fine line of being let's put it this way, good economists that I trust, that are usually more right than wrong compared to the majority who usually say things that never ever happen. In other words, they're wrong most of the time. They're the ones that have Nobel Prizes in economics because they're Keynesians, and they support the old model, and obviously the Nobel Committee supports the socialist model, and so they lean into them. But the successful economists like Arthur Laffer and things like that, Steve Moore and so forth, who have been way more right over the decades and can't even get near even be nominated to have a Nobel because they believe in supply side economics, which works really well, and the Keynesian is a mess. But it'll take some time for it to clean up, I guess. But in the end result is that they're really trapped now. They're confused, and so the good ones are saying Mr. Powell may have to resign. I mean, if he has to raise rates because of what he's done, then then they're really in trouble. So the feeling is that he'll drop another 0.25% point in November 6th, I think it is, and the day after the election, and then after that, they may stop altogether because that'll be 0.75 point, and then we'll see how things go from there. But that's the we've been here warning you about the bond vigilantes for weeks. I've been telling you, weeks. So ever since the bond, let's put the bond up there. There it is, right. Where's it at? Let's see, it's right there. There it is. Ever since we went into that weekly sell up in here, they lowered the interest rate right here. And what do? We go into a weekly sell and a daily sell. And we were in that daily sell for 8 days. And then we go into a daily buy for a little dead cat bounce. And I remember even making the joke, dead cat bounce with that weekly sell. And then they crush it again. So we'll see. Only time is your friend. Time is always your friend when it comes to trading. The more time you have, the better you are. All right, from there we jump over to the Great Experiment, I guess. Yeah, that's the yen there. So let's take a look at the Great Experiment. There it is, right there. That's it's in a sell still. We want it. Boy, we would love it to stay inside this box now for the next 3 years. Please stay there. I mean, if it wants to go lower, we'll be very happy to see it go lower. But we'd love to see this thing just calm down. From 1 to 40. Oh my God! Look at that panic day where they just pushed it to 40. They had some panic days, but then somebody was really throwing in the towel. They threw in the towel. They gave up. They surrendered. Surrender. And then from there we go over to the South African rand, the second largest BRIC in the world, which the BRICS are meeting this week, and I think this week they've been meeting in Rusky, right? In Moscow, they've been meeting, and I guess they're figuring whatever they're going to figure out and do whatever they're going to do. So you can see here, this is the South African rand. It's been on that upwardly slope. I guess I could draw a line in there because I talk about it so much. It's got that upwardly slope going on, and there it is, like right there. And since it's in that upwardly slope, we would assume yesterday they threw gold into the sell, and they threw, I think silver made it into the sell too, and copper made it into the sell. Let's take a look at them today. Let's shoot over to there, and there is the gold, and the gold went into a sell yesterday, and today it's flirting with the buy. It's trying to lift back up again. That's again, there's a cost to carry, so interest rates when they go down, obviously it's more positive for the metals complex, and obviously when the interest rates go up, it's not. What's curious is you can see here, it's been gaining value as interest rates have been rising these last 2.5 weeks, which I found that was one of the warning signs, is that, wow, they're doing that. So it just showed me how confused and lost the market was. That said a lot. It means that they're running to safety. That's like a flight to safety thing going on. So, to that goal, we go over to the silver. Silver did the same thing. It did the same thing. It went into the sell, and now it's trying to climb into the buy. And we're both products, both gold, both silver and weekly buys. They're not threatening. You can see it here. The green line is way above the manifold right there. Same thing in gold. You can see that same situation. It is curved a little bit, when it's heading there. But look at that. The fast is trying to break through the manifold on the upside. So, as much as we're seeing the South African rand lose against the dollar, it doesn't seem to care. It's like the honey badger. It don't care. You can see yesterday, copper. I heard somebody today, when I look at copper, all I do is think about China. Because they can take their ghost cities, knock them down, and then rebuild them again and create the jobs. But unfortunately, it's not very productive, so they've wasted trillions of dollars on building things that are not being used. They have reason they call them ghost cities is that they're like half the size of Manhattan. And they build these giant cities, and then they knock them down, and they build them again. This is the way they're keeping people employed. And that's a waste of resources. And so that's why copper is the gold of China, is because, when you're building all those things, you got to have plumbing and water. And I think they've gotten to a point now where they don't necessarily always use the most expensive items like copper and so forth anymore. They just do it, and then they build them, and there's no electricity in the buildings. So you got a skyscraper with no electricity, and you got buildings and fake factory buildings and so forth doing nothing, and then they'll come in after 3 or 4 years and knock them all down and then start over again. So it's a very weird thing, without a media. Imagine if we did that in the United States. I mean, the media would be going nuts. They'd be going crazy. But when China does it, it's okay. You can waste trillions of dollars and bankrupt your real estate market and so forth, and not care. All right, and then from there, look at that. Copper was flirting with the weekly sell, but look at that. It's moved away from it now. It's trying to climb back up into that buyish thing. That's good. There's hope. I think I started this off with the idea that there's hope that China is going to possibly get its act together on its stimulus. They think that there's more China stimulus coming, more sugar high. And as we told you, and we had it in the title, China has really got an issue there because, they're not, they're not growing, and they're spending lots of money, and real estate markets collapsing. And they need to spend, roughly anywhere from 20 to 20 to I'll round the numbers out, 20 to 30 trillion won. And the first stimulus they've done now is only 1 trillion won. So they're way off. They're barely 10. They're not even 3%. They haven't stimulated. They need to stimulate at least 40-50%, which would be somewhere around 15 trillion yuan, not 1 trillion. So they got a lot of work. We did webinars on that too, showing you the stats and so forth. Again, we're usually ahead of the curve philosophically around here. And when it comes to the actual prices of things, we're ahead of the curve there too. All right, and then we go over to the most dangerous short in the world, right there, and that is platinum. Looking very firm again today. Didn't get into that sell yesterday. They're starting to wake up to the fact that, Rorge, you better not be short this thing because one day it could be $2,000 again with gold at $2,000. Do I expect to see platinum run to 2,700? Not particularly. But I do expect to see it get back up around the same price as gold, and I expect to see gold back off and platinum, lift up. So it's just a matter of time here. Whatever they're doing, whatever the Federal Reserve is doing for the ruling political party here, I think it's getting ready to come to an end. And free markets and free people are going to make the economy grow, and not with all the crazy stimulus, fake ghost city type ideas, that type of thing. And that is that when it comes to the four metals. So from there, we're going to jump over to crude oil this morning. And we'll do that on the beta. This way we can see where Brent is and so forth. Where is that mouse at? Come here, mouse. Mousy, mousy, mousy. Right there. And there's Brent. Brent's a third day in a buy. You can see that right there. See the green dots right there. But we are on a weekly. We're pushing cleanly through the neutral. So it's telling you, don't be short. That's all. That's what it's been telling you for 3 days. Don't be short. That's it. Not get long. Just don't be short. And that's what it's trying to tell us. Now it looks pretty firm there. And we'll give you a bigger picture of it right now, like so. You can see it, it jacked up on, I guess that's Tuesday. Fell back on Wednesday. Jacked again up on here Thursday. I made it high. And now it's trying to back off. It's still plus for the day. And so what we're looking at is, this is possibly just a dead cat bounce, where it'll roll over again. Mr. Trump has come out with a policy number. He said that he will get the price of oil down within the first 12 months of his presidency. It'll drop, he said, 50%. He'll drop it down. He'll get it dropped down 50%. And that does not surprise me any. That basically sounds realistic, since we saw when he was president that he got oil down to zero at one point one day live here on the webinar. Not only did he get it down to zero, it went. I kept on saying, I think this thing's going to go minus. It looks like it's going to go minus by maybe $10 or $12. It went minus during our webinar of $39. In other words, people were paying people to take oil from them. Here, I don't want this oil. I'll give you $39 a barrel. Just take it. I don't want it. That's how oversupplied we were. And it was a fun day. We speculated that it'll give it a bounce and get back up into the $6 or $7 area, and it did. And it was great. It was a great trading day as usual around here. It was fun. Pontificating of the action before it happened. So that is crude right now. Now let's take a look at Brent. Let's see, Brent. We should put a oil index in there, like an oil stock index, just to get a flavor of what they're doing. I mean, we look at that Spanish company, but I think we're going to do that today. I think we're going to put we could add like Exxon or something like that, one of the big industrial oil companies, just to try to get a flavor of and then there's I think there's XLE. I think that's the oil stock index. There's two different types of indexes. One is like Exxon and Chevron and British Petroleum, and then there's another one that has oil companies that are commingled with, say, natural gas, like Chesapeake Oil and Schlumberger and so forth. They're like a little bit different in their nature, whereas they don't really supply gas stations per se, you know. So maybe we'll just put ExxonMobil in there just to see what that's been doing. That could be interesting, you know. But there it is right there. You can see there is West Texas. That's it's acting the same way West Texas is. That's Brent C. You can see it's 3 days. Now the difference between that and you can see here, there's no green dots. You can see here, whereas we have 3 days of green dots in West Texas oil, but here it's got red dots. It's not even able to get that going. The histogram is plus, just like West Texas is 3, but it's also doing the same thing. It's been dropping through the zero line. It's basically saying, and this is even more clear, don't be long. It's, even with the histogram up there, it's telling you don't be long. Don't. All right. So from there, let's put we go and we look at the big derivative off of that, and that is the heating oil. It heats the engines that fly the air, that propel the airplanes in the sky, and the big trucks on the roads that bring supplies to many corners of our world. And you can see here it's a second week in a sell. Went into that sell in here, right in this area, these days right there. And then now it's trying to do the bounce. It's 4 days in a buy. And you can see right there, that's 24, and you can see right there. Let's give it a refresh. You see now there, Monday, Tuesday, Wednesday, and now Thursday, all on the plus side. And that is, the heating oil. So they're picking this up a little bit. The reason we call it heating oil is because in the United States, the eastern part of the United States loves to use this oil that they put in trucks and airplanes for heating with a power system in the house that burns oil. So, and that is the action we're seeing there. And interesting, it went into the weekly sell up in here, and as much as it's bouncing, somewhere around in here. Let's see, we'll do this like that. So you can see it's kind of trapped. It's trying to lift, but it's not getting up in the. It's trapped right where it started from. Basically, that's what it comes down to. So it's more of a dead cat bounce. But I would expect to see this go up solely because. We're seeing the winter months are heading, and they're right in front of us. 6 weeks away, 7 weeks away. So you got to have some of this stuff stored up. People are filling their tanks up, preparing for the cold. All right, and then from there, we go over to natural gas. Let's see what natural gas is up to this morning. This is a big power source in Europe. A lot of natural gas for heating and cooking, so forth. And you can see here, it's got 4 days of green dots and 2 days, right there, of green. But you can't take that long either. It's come down from $3 down to $2.21, almost 80-cent drop, basically a little bit more than an 80-cent drop. And you can see we're in a second week of a sell. So this is, again, another... they're probably loading up because the temperatures are dropping a little bit around here, but nothing bad. We're here on the East Coast. We're having a pretty warm fall. Yesterday we're in the over 80 degrees Celsius Fahrenheit, which is something like 27 or 30 degrees Celsius. It's pretty warm. We're definitely warm, and lots of sunshine. And so that's the nat gas. Now let's take a look at the energy company in Spain, and then we're going to add an energy company in the United States. Maybe we should put, since we're looking at, something that probably produces a combination of, refining product like an ExxonMobil, which would show us heating. They make money from heating oil. They make money from gasoline. They make money from, digging out of the ground. The fuel. It's the crude oil itself. So let's find the energy company in Spain just to get a flavor. They've been in a weekly sell for 5 weeks, and they're flirting now with the weekly buy. I'm sorry, weekly buy at this point. I believe I saw. Let's see, where is it at? ENG. Where are you? There it is, right there. There's the ENG, and you can see it went into a buy 2 days ago. Yesterday, it's trying to stay up there now. You can see, as much as the weekly was really looking pretty aggressive there yesterday, it's still in the plus. Both the fast and the slow have jumped across the zero line too. So we can see after 5 weeks in a sell, since it topped out up in here, it's definitely a strong dead cat bounce. Now let's add a product, and that product is ExxonMobil. XOM, I think it is. ExxonMobil. Let me just double check. Let's make sure we got this right. ExxonMobil. I'll just double check it real quick. There. Yep, XOM. All right. So this is ExxonMobil. Okay, create. And then let's get it going for me. Me. And turn it on. Cool. Just double check. Yep. Now let's go to here and let's see what ExxonMobil has been doing of late. Right there. Haven't looked at that. 5 days of red dots, and it's been in a minus. Interesting. When crude oil does go down in value, it has a natural tendency to drive the stock down too. I mean, their earnings do well, but overall the product does seem to drop. And you can see here it's playing with the weekly sell after 4 weeks in a buy. Back in here, somewhere in here, it went into a weekly buy and it went from the 10. Basically the 109.75 area all the way up to the 125.37 area. So it was like a $16 move. Is that right? Yeah, like a $16 move. Interesting. So you can see here it's and then when it went into the sell, let's give it a spin. There we are. You can see right here, back in the end of August. Is that right? Yeah, August. And then right there, no, yes, maybe. Was that 0830? And that is, there's 0830, I guess, like right there. Let's do this. Something like that. There's August. So September, yeah, so it was right in here. It went into the buy. Went into the weekly buy right in this area here. And I guess you had a pop. That doesn't seem right, does it? So this is this week. That's last week. So that's 4 weeks back. So 4 weeks back should put us into the August area. Yeah, so it's back here. Back in here. It went into the week of the close of August 20. Well, that says 9/27. So it's September 27. Where's September 27? Right there. Okay, so there's September 27. That low right there. Went into the buy there. Okay. Nice run, huh? Winner, chicken dinner. You can see the same thing right there. Went into the daily buy same way. Right right there. 927. Zoom. Up. Interesting. All right, so we got a Spanish energy company and we have an American energy company, so we can get a better flavor of what is really hitting where the rubber meets the road, basically. All right. So from there, we've pretty much finished the energy sector. We can go take a look around the world and see what's going on. Anybody care to see anything particular? I'm just going to roam around and look, but if you want to see something, let me know. I don't care what it is. If it's an individual stock or it's a currency or a grain or, coffee, whatever you want. Matter of fact, let's see what coffee's doing this morning, because I'm a big fan of coffee. What's coffee doing this morning? Coffee. There's coffee right there. Give it a spin. There it is. And see, coffee's kind of been in a sell for a few days here. We were in weekly sells up until like a day ago or couple days ago. It started to try to turn into the buy. So it's trying to tell us to be careful here. It was in a sell. Now it's trying to climb back into a buy, and we'll see how these guys do here. And you can see coffee has moved over the last since June. Was in the was at the $2.23 area, 24-cent area, and has traded all the way up to the as high as $2.75. That's a big move. From basically $2.22 to $2.75. Nice move there. Anyway, that's coffee. Just thought it for the fun of it. Anyone want to see orange juice? Let's see what orange juice is doing. There is orange juice. That's a November contract too. Showing a little strength in there. It's been in daily sell for even with the hurricanes down in Florida. It didn't seem to. They lifted them right to the hurricane and then they sold them down after the hurricane. You can see here's the second week in a buy. So it went into the buy on 10/18. 10/18? Yeah, so 10/18. Right there, it went into the buy and they just started popping. Gave us a run right up. Huh. Interesting. All right, let's take a look at Tokyo. Unless someone wants to see something else. Just thought I'd show you a few of these things. They're kind of neat. Let's see what Tokyo did last night. Since their currency is kind of topping out in that 53 area, let's see what it looks like. Interesting. Okay. So there is the Nikkei. Nikkei tried to lift up last night. Interesting. Getting a little push there. Still in the sell here on the daily for a bunch of days. And the second week in a weekly sell. So it's in a sideways market. Basically telling you to just stand to the side. And then we can go to Taiwan. Let's see what the chip manufacturers are doing. Right there. See, there's like 5 red dots right there. And it's in a sell, but it's in a weekly buy. So it's basically telling you not, right now, don't be long. Just be neutral. In other words, had you long here and you were a winner, chicken dinner, and now it's telling you to just stand to the side and it's a little bit lower, but we're not seeing anything yet in the sense of the weekly and the daily are not working together, so it's telling you to be neutral. And obviously we have other opinions on how to use those tools depending on what you use the trading for. If you're a producer or an investor or a volatility trader, we can tell you how to use it better. And so from there, we'll go take a look at South Korea. There it is right there, South Korea. And you see a little weakness there too, same thing, and in a weekly sell for 4 weeks. So you can play the short side there. And it's been looks like a nice little winner at times. No complaints. From there, we'll go over and see when are they going to do the next stimulus. That's what, January beans. Let's go see Jan beans. Right there's Jan beans. Jan beans, they're flirting. I saw the weekly is not there yet, but by the end of today, it might be pushing into the buy. What's curious is that the November beans are looking very firm also. Let's see if I can find you November beans. Right there. There's no beans, I believe it is. And it's really trying to, look at that. You can see the weekly is really trying to climb up. And on the old platform, remember, it's updating right now. This won't update for another couple hours, because of the end of the day. But it wouldn't surprise me if we look at this tomorrow and find it in a buy. Especially with the way it's lifting. It's been in daily buy for, as you can see, 4 days now? We have 5 dots. 4 dots right there. It went into the buy right there. So it's pressing up. We're on the other platform. We are flirting with the weekly buy at the same time. You can see the fast is already through it right there. And the slow is trying to break through the zero line as we speak. It's pushing. Pushing. So there it is, soybeans. All right, let's take a look at China, Illinois. I'm not China, Illinois, China. My dad used to call it China, Illinois. My dad would say, I don't understand it. This place, China, must be in China, Illinois, because they are supplying everybody everything. And I'd say, what do you mean, Dad? He says, well, look at it. Everywhere you turn, something's from China. It must be America, because no foreign country would ever have that much opportunity to sell here. So he used to refer to it as China, Illinois. China, Illinois. You see here, a little down, I guess, from last night. Let's see. Yeah, they knocked it down a little bit. Still green dots galore. You can see it's in a weekly sell for a second full week. And the daily has been in a daily buy for 5 full days. So it's telling you to be careful. The thing wants to roll over again. And all those market people, that are the analysts that keep on saying that China is going to bail the world out, doesn't seem to be happening. All right. Now from there, we go over to Hong Kong, Hong Kong, Hang Sang, Sang Hang. How's it hanging? Where's the Hang Sang? Right there. There's the Hang Sang. And we're seeing there, it's almost like you want to use an average sometimes. You can see 5 days in a buy right there, 2 weeks in a sell, so you can't be long. Just told you down in here to just be careful. Don't be long, because the weakness will kick in. And sure enough, it has. You can see that. So that was just a dead cat bounce, even there. Dead cat. Selling them down. Okay, what's next, traders? Jakarta. We saw Jakarta really lifting up with the oil prices. They're a very large oil nation in the South Pacific. We can look at the Singapore Straits Times. They're a very capitalistic society. Let's see what the capitalists... Used to be Hong Kong was like the #1 South Pacific capitalist society. And Taipei was probably like #2. And now it's Singapore and Taipei. Yeah, you can see there 4 days in red dots. Daily sell for... looks like 4 days too there, and you can see it's flirting with the weekly sell right there as we speak. So they are up relatively high compared to a lot of the other stock indexes, and so they are holding firm. I guess that's the profit taking that's going on right there. Take a profit. Yes, indeed. All right, now from there we shoot over to. Where do we shoot over to? We shoot over to. Did I show you Jakarta? Let's see what Jakarta's doing. Yeah, look at that. They've been in buys and buys and buys. Last night they sold it down. And you can see right there. Yesterday they threw it. The algo. See where's there's. Let's refresh this. So you can see here. So there's the 20. So okay, so they just have that's Sunday night, Monday, Tuesday, Wednesday. So it's pushed into it. Okay, yeah. So it's pushing down. It's going into the sell last night. Now here you see the weeklies turned up. So they're just taking profits more than anything else. It's just a dead cat bounce situation. And then we'll go over to. Let's see. From there we go Nifty 50. Let's see what the Nifty 50 is doing, because I understand that they negotiated with China to stop shooting at each other. They have a lot of border, and so they've been, battling back and forth and doing lots of wild things, shooting at each other, tanks and bombs and so forth. You see right here, 4 weeks in a sell coming off of its highs. I guess some might be getting nervous that they're becoming, when you become part of the brick, you really are picking up a lot of responsibility. That's for sure. They really are. They're picking up a lot of responsibility, and it's a tough responsibility. So you have to be very, very, very careful about joining the bricks. But, when you don't have anywhere else to go, you got to do something. So from the brick, is there another brick? So we know the South African Rand's a brick. It's a brick. China's a brick. The currency's locked to the dollar. So, it's not like we can look at the Chinese yuan and get a feel what's going on solely because it's a fixed currency to the dollar. So you can't. It's really odd. You can't become the world reserve currency if you're locked to the dollar. Sometimes they don't really talk about this stuff as clear as you would want them to. It seems odd to me. But anyway, what else have we got going on here? Let's take a look at the DAX this morning. Right there. Lifting up. You can see that? We got a green dot, and it's trying to get through the zero line as we speak right now. Right how? How, wow, 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 wow. Yow, 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 yow. I think that's plus, isn't it? Let's make that so bigger. Yeah, it's plus. See it right there? It's plus. So it's trying to lift up this morning. I know FTSE, last I saw FTSE looked like it was doing the same thing. See what the FTSE is doing, and we'll get out of here. FTSE, butsy, 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 butsy. Itsy bitsy spider. There's the FTSE. Look how high that jumped up this morning. Check that out. Look at that. It was down there and took off. It was a big gap up. I've got a red dot there, but it's definitely acting interesting. You can see here it's in a weekly buy for 5 weeks, and it's in a daily sell for 4 days, so that makes kind of sense. It's got you in that neutral stance, just waiting for go, 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 go. All right, I guess we've had enough fun here. I hope everybody enjoyed it. I don't even have a title today. What should we call today? I guess, I'm tired of being right. Not tired of being right, but I mean, what can I say more than what we've already said? So I guess we could say today's title is The World Sees It Now. That's really what it comes down to. The world actually sees it. like the way we saw it. And that is that the bond vigilantes have taken full control and taught the Fed. They spanked the Fed. That's what they did. So today's title is, I guess you could say, the Fed was caught. Let's see, Fed policies. So we can get that going again. Where it is, Fed policies seen by all. That's pretty much what it comes down to. They've all been caught now. It's over with. Now everybody's saying stuff like, geez, Mr. Powell, maybe you have to find a new job. Mr. Powell probably just retire with his government pension, so it won't matter. All right. And I'm sure it's inflation protected, no less. So this has been Doc. We'll catch you tomorrow. Tomorrow is TGIF. Thank goodness it's the end of the week. That's what it should be. EW. TGIFEW. Thank goodness it's Friday, end of week. I like that. All right, so happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, everybody have a safe and a smart weekend, and we will catch you on Friday. No, wait a minute, you can't have a safe. We got one more day of this fun, so we'll catch you tomorrow, and then you can have a safe.